Thanks, Paul. And actually, before I start this morning, I just want to say a huge thank you for inviting me. It's a real privilege to talk to all of you. A brand, and I'm sure you maybe don't think of yourselves this way, but to be associated with a brand that is as powerful as RICS and has as much meaning behind those four letters and as much credibility and international standing as RICS does is a huge privilege to be here today, and on a working basis an enormous privilege to have the affiliation that we have through our own business, not least the business that Paul's in our surveying business in Countrywide. Brilliant, although difficult to follow the speakers we've already had, and I hope, exactly as Paul said, that what I can give you is a view from the other side of that telescope, where we are dealing constantly with the implications and consequences both of policy but also of the sort of things that Jeffrey just outlined in terms of, that macroeconomic stuff coming down and actually for us being the reality of our business every day. And if anyone were waiting for a punchline in my speech that's any different than you've heard today, you'll be disappointed, because from a business planning perspective, as we look out over the next 3 years, we think the only mantra for us is going to be one of self-help, because we do not believe that economic conditions and how they translate into consumer confidence in the housing market are going to do us any favours whatsoever. So sadly, we concur. I was rather hoping you were going to stand up and say we've got it all wrong and there are reasons to be cheerful. Okay, right. So you know who I am, Alison Platt. As Paul said, I've been at Countrywide now for almost 3 years. And I joined Countrywide back in 2014, and I've often recalled the last conversation I had as the interview process with the person that had been the chief executive of the group and was at the time chairman, who said to me, "It's just the most incredibly fantastic time to take over, Alison, because as our housing cycles go, we are right at the beginning of the recovery. And all the hard yards we've put in over the last few years, it's all there for the taking, girl." And as he sits in the sun now, no doubt watching his yacht somewhere out in the Med, he was wrong. Okay. So it's been what did Jeffrey said, it's been an interesting period. And what did the Chinese say? May you live in interesting times. I frankly wouldn't mind a few dull years career-wise, but there you go. Since I joined, we have had the vote, obviously, to leave the European Union. We've had 2 general elections, and as somebody has already said this morning, the possibility of another one on the horizon. We've had changes to stamp duty. We've had the revelation in the autumn statement of the removal of tenant fees and the swift introduction, a constant kind of growth of a increasingly intrusive regulatory environment. And I don't say that in a pejorative sense, it's just fact. So as we see things like the introduction of anti-money laundering regulations, and of course we've seen a little add-on to that in the last week or so. And of course the introduction of landlord licensing schemes, of which I think there are about 17, which differ now across local authorities around the UK. So it's been a pretty febrile environment and a busy 3 years, and I don't expect in truth that will change much over the coming 3 years. So it's pretty apt, actually, I think, for the theme of my talk today to really be about how as a business we thrive and adapt during times of change, because we don't actually have a choice. Shareholders own us, 11,000 or so colleagues rely on us to pay their wages, and equally, if not more importantly, there are a whole swathe of people out there as consumers who rely on us for help and guidance and direction through what still is possibly the biggest thing in their lives. And we often talk about what an emotional process buying a home, often the single biggest financial decision anybody will make in their life. But you only have to hear everything we've been hearing on our radios and listening to it again this morning, when people suddenly lose their home and the trauma that is involved, not only in dealing with the immediate crisis they're in, but all of the things that challenge them then in thinking about where they want to live and how they want to live going forward. So, you know, it is huge and unbelievably important, and I'm going to say more about that and about the sector and build on some of the things that Geoffrey's talked about in terms of the force for good that I think RICS can be in this country in helping the various and often competing parts of this sector come together. Okay, I could not let this moment pass. I know there are some of my colleagues who are in this room, and I know many of you with all your industry experience will know Countrywide, but some will be surprised to know something about our scale. So let me just say a few things. We, and many of you will know, well reported in the industry press, that post last year's referendum we took some very swift action to take cost out of our business. One of the areas that touched was indeed our branch network. And so we now operate in branch terms in a footprint of about 900 branches across the UK, England, Scotland, and fabulous businesses in Scotland indeed, and in Wales. We're pretty well involved at every price point when you think about the residential housing market, from terraced houses in Bolton all the way through to penthouses in Mayfair. We set up our own residential retail fund. Some of you may know that, to deliver build-to-rent schemes to the market, the Vista Fund, and we set that up 2 years ago as a joint venture with Hermes Investment Management. And indeed, two of our largest schemes, one of which will in fact be the largest of its type in the UK. The Cargo building in Liverpool is just about to open and come to market. And then that will be followed pretty quickly by a building, a not dissimilar building in Manchester, so we're very proud of that. We are, of course, and often cited as the UK's largest estate agency group, but we also help more tenants and landlords let homes than anybody else last year, and we're the market leader in that. And we are the UK's single biggest mortgage broker, and we distributed more mortgages than anybody else last year as people sought either to remortgage or to buy homes. You'll also know, and there are plenty of bits of the group that I haven't mentioned, that we offer conveyancing, of course surveying, and property management services, and of course we have in Lambert Smith Hampton a commercial business that we're very proud of. We've been successful in delivering more capacity in the sector, and we've worked very closely with RICS for a number of years. But why does any of that matter? Well, I think first of all it matters because it means we are better placed than anybody to have a holistic view of what's happening in the property sector in the UK. We're in a good position to see the changes, the effects, the opportunities that we perceive, and the threats across the whole industry, but also, of course, how that fits together. It also means, if I put my commercial hat on, that actually the diversity of those business streams, the diversity of the way in which we bring income into the group, really ought to give us a level of resilience that we think is pretty valuable, and I will come back to talk more about that as we go forward. But we do live in times of unprecedented change, and like many organisations, we, along with pretty well everybody in the property sector, have had a pretty torrid time in the last 18 months. Geoffrey talked about the changes to stamp duty. It was really interesting that the Deputy Mayor chose not to, but of course the nature of and price of housing in the UK means that the changes to stamp duty in the first wave that we saw really significantly impacted London and the South East far, far more than it impacted any other part of the country. And if you're a working family, I find it fascinating. I was brought up in Oldham, my family are all still there. And it was really interesting watching through the referendum process this notion that continues that if you live in £1 million house in London, then you're obviously a Goldman Sachs banker. When the reality of that is that for many people who commute in and out in the way that I do every single day, if you've got more than 2 children, you are probably paying around £1 million to live in a family home that allows you to commute and work in the capital. So we have our views about stamp duty and how punitive it's been to working families in London, but I suspect that will continue to fall on deaf ears as we operate in the regime that we're operating in today. The introduction of higher rate stamp duty tax rates for second home purchasers, combined with the changes I've just talked about, really, as Geoffrey's outlined brilliantly, I think, suppressed the market massively. We saw a huge pull forward in the first quarter of 2016, as not unsurprisingly, people who were considering buying second homes or indeed buy-to-let landlords brought purchases forward in a really significant fall away thereafter. That added to the uncertainty, and I think to some degree was clouded by the outcome of the EU referendum at the end of June, and of course we were further not helped by a surprise election. And in fact, we were just putting together our reworked forecast to take to the board when I happened to walk past our reception that has a Sky rolling news TV in there with Theresa May announcing the election on the 8th of June. And I went back round. I won't, it's not polite company to say what the CFO said to me when I told him that there was going to be another election. But we were not thrilled, I have to say. And I don't actually think, I mean, Geoffrey talked about the outcome. I think the outcome does hamper the housing market because I think it is yet more uncertainty. And I think when we relate the political position and to some degree the vulnerability of the government today, I think that does translate right down to consumer confidence and simply the appetite of people to take risk in moving on, moving up, and moving through. So I think it is, I have to say, I think it is a further suppressant. So transactions fell for us in the second quarter of 2016, as they did for the market. They fell considerably and they remained down year on year through the third and fourth quarter, around 9% down year on year is our view. The upside of that for us is that, and again it speaks a little to our diversity, is that what consumers did show is an appetite for mitigating risk. And the number of people seeking to remortgage, in fact, was up in 2016, with approval numbers up 14% compared to 2015. And that's its highest level since 2008. Most recently, of course, we are facing into the decision to remove tenant fees. Now, at Countrywide, we think we're in a very strong position to contribute to the debate on the sort of issues that impact tenants and landlords. We've let more homes than any other agent in the UK. We support around 52,000 tenants to move into their new rental homes. And we work with about 50,000 landlords to let their properties. We have about 90,000 properties fully managed, under management for us, in our portfolio. And that gives us, very difficult to get a reliable measure of market share, because clearly there's no equivalent of the land registry in the private rental sector. But we know that makes us the leading player, and we think it probably gives us around between 5 and 6% market share. Now, the Chancellor's intent to remove tenant fees does bring further challenges to the sector. The increasing regulatory burdens, we think, will risk some agents putting quality a poor second, potentially to rates of return. We've seen real price pressure in the private rental sector as people have sought to take share. And yet the important thing for us is that we keep landlords and tenants safe, and that we continue to see a rise in the quality of stock that comes to the market as landlords are willing to invest to seek a consistent return, and of course to comply to an increasing regulatory environment. And so for us, whilst that's, by the way, we have not in any shape or form pushed back to argue that the removal of tenant fees is a bad thing or shouldn't happen, principally because we think that would be pointless and a waste of effort. It's coming, and anybody that thinks it isn't, I think, is deluded. But our view is that we have to step forward and figure out quite how we maintain the profitability and viability of that element of our business, but that we do so in a way which really enables us to continue to deliver on a very high level of service, particularly around compliance and safety and security of tenure for landlords and indeed for tenants. In our view, the continued housing shortage, or the availability of stock, again, which Geoffrey spoke to, will mean an increasing reliance on homes in the private rental sector. We want to support a thriving, competitive, fair and transparent private rental sector, and we think high standards for tenants, agents and landlords are fundamental to that. We think it is important, actually, that fair, transparent and affordable rents get more profile than they've necessarily got today. But we also need a rental sector where landlords are encouraged to continue investing, continue bringing new homes to the market, and continue to drive standards up. We think healthy competition is a fantastic thing, but we think the importance of a level playing field is significant. And we think there's a critical role to be played in that for strong regulation and critically strong enforcement. So, challenges in the property market are likely to be with us for some time, And whilst uncertainty around the UK economy weighs heavily on consumer confidence, we think this is our new reality. Let me just move forward a bit. There we go. We think this is our new norm. So, we don't think this year is a blip. We think the level from which we'll forecast growth, and as we look forward, we are right in the middle of doing our 3-year planning as we speak. We actually believe that not only will we see no growth in the volume of transactions that are coming to market over the next few years, we think there'll be new challenges. We also, of course, we believe there will be new opportunities. In our view, when the only thing that's going to enable you to grow your business is self-help, then you have to see the conditions in which you operate as an impetus to change and one which will enable us to grow our business faster. Over the last 10 years, the property sector has operated very differently. The majority, 60% of people who bought their home in 2007 have stayed put. Londoners are more likely to have moved, 49% of them, and compared to people in Wales, who for whatever reason are the very most likely to have stayed put, where 71% of those who bought then have not moved. 2007, as we saw in Jeffrey's slide, was also a peak for house prices, with around half the people who since sold their homes going on to do so at a loss. And the resilience of the housing market in London and South East means that only 24% of Londoners would have sold at a loss, compared to 69% of people who live in the northeast of England. It still takes, interestingly, roughly the same time for a single person to save up a 15% deposit for their first home as it did back in 2007, just over 11 years. But this has gone up from 15 to 18 years if you're in London, and any of you that have got kids starting out on the housing ladder, that is a very real challenge for youngsters coming into the market today. The average time, though, and this is a very depressing statistic for an estate agent, the average time in between house moves is now almost doubled. And it used to be that on average 1 in every 12 households would move each year. That number's dropped now to 1 in 21. Of course, the flip side of that is we have seen the private rental sector grow exponentially, and it is up 68% since 2007, with an extra 1.8 million of us living in a home that is owned by a landlord. On the financial side, in 2007, 1 in every loans had a loan-to-value ratio of 100%. And when you hear that, and you step back from that and think, goodness me, that's a risky position to be in, the FCA's mortgage market review has brought in much more appropriate and stringent tests. And although lending at more than 90% loan-to-value, as you will all know, is starting to gain some momentum again, it is still way, way behind the levels of 2007. Jeffrey had a great slide on house building, and we know and appreciate that picture, and we know that new homes under construction are still well below our pre-crash levels, and therefore impacted, of course, the price of those houses that are coming to the market that are available. Since 2007, house building's fallen some 144% short of household growth in London. So we have a very acute point in the capital. Help to Buy did have an impact on the sector, with around a third of homes since 2013 being a Help to Buy home. But the equity loans are due to end in 2020, and house builders will be starting to factor this into their plans, and it will be interesting to see what fills that gap when we get there. So as far as we're concerned at Countrywide, the challenges we face are a catalyst for change. For our business, we adapt to changing needs in a way that we believe matches what consumers and our current customers want. We absolutely believe that there continues to be a real connection between people and the digital world, and we also see that a relationship that is stronger than ever when it comes to a desire for personal expertise, particularly in challenging markets, gives us a really significant advantage. That's why our strongly held view has always been that when it comes to investing in digital products and services, and we are, the winners will be those people who combine those with personal and professional expertise delivered by exceptional people. So, Our strategy has not changed. Our fundamental purpose, anchored around believing that if we get it right for the customer, we will win, remains. In 2015, we carried out our largest ever piece of customer research, more than 3,000 people interviewed, to try and understand what their needs were and sharpen our views of customer segmentation. Not all customers are equal. How do we start to understand what people really want? And this insight continues to be the foundation for everything we do as we centre and build our business around our customers. Our strategy was to build our future, anchoring our business about what customers tell us and letting that be the driver of the measurement of how we perform as a business, whether in lettings, in sales, mortgages, financial services or conveyancing. That work started in 2015 to improve our customers' experience, but while at the same time increasing the efficiency and productivity of our business. And managing and navigating both of those things continues to be right at the top of our list. We're always looking at our business model to try and understand what it is that our customers want and to make the changes where we can, from a change in small things like changing our opening hours to be more flexible at evenings and weekends, or launching our digital service, which is now live in 50% of our estate across the UK. The headwinds of 2016 have not caused us to move away from our core belief. In fact, we're arguably more committed than ever. So as an organisation, we remain committed to the view that leading in this sector will be delivered through focusing on three things: delivering a better, more personalised customer experience, creating an internal environment which allows great people to flourish, and aligning our portfolio to where the growth is, so that if we combine the three, we can create shareholder value. Let's talk a bit about our customers. Our focus on building a business which is genuinely multi-channel in nature and delivers more choice and flexibility to customers and equally lowers our cost of doing business is an absolute imperative for us now. You know that property transactions are often complicated and emotional journeys, and that every customer is different. With the launch of our multi-channel proposition, we're tailoring the journey to give customers real choice. Choice of product, choice around how they interact with us, and choice in where they value support and wish to pay for it, or where they want to take more control and have more surety of costs themselves. And our unique proposition was really designed to enable customers to choose at either end of that spectrum. It gives customers the greatest choice in the market, because we think we're uniquely placed at the moment to offer that choice, and the ability to manage the process themselves online for a competitive fixed fee, or use indeed the full high street service, providing the expertise and knowledge of the local teams that are there today. We want people to have easy, accessible services that help them on their property journey in a way that they should expect from their supermarket, their mobile phone, or their travel company, but with the added peace of mind that they can move seamlessly across channels if they need to. We launched our digital sales pilot in the summer of 2016, and the outcomes have actually surpassed our ambitions and expectations, and we've accelerated that rollout now such that when we launch this week in Scotland, we'll outside of London have taken that product to all of our major brands. Now that rollout will continue at pace, and of course a lot of the focus and attention in the sector has been on the application of digital to sales. But it's a reality for the total sector and the total product suite. So our effort and energy now is really around developing digital and phone-based services in our lettings business and indeed in our mortgage and protection business. I talked about the importance of people as a second strand for us. We know that if we're going to deliver a first-class experience for customers, Countrywide needs to be a great place to work. We have to ensure our colleagues have the right tools to do the job, and we have to do that in an environment that is safe and one in which they feel they can develop their career as individuals inside our organisation. It's clear that by taking action that we receive from our annual My Countrywide survey, where, by the way, we're delighted that this year we had 80% participation, and working with our people and our leadership teams across the business, we can continue to make change that we think will deliver really significant value for us and deliver our aim of being one of the best places to work in the UK. In the last 4 years, we've led the way with our Trainee Surveyor Academy programme, laying the foundations for our people in that part of our business to develop a long-term professional career as a chartered surveyor. We've seen 149 new surveyors, with our first cohort qualifying in 2014, come into our business, and we are delighted at our ability to keep and continue to grow those individuals as they come through. So I wanted to give you one example of someone who's come through that programme. Matt Alison joined the Countrywide Surveying Services business in 2013 as a trainee surveyor within our Surveying Academy. After studying building surveying at Coventry University, Matt was part of the first phase within the trainee surveyor programme, qualifying as an associate member of RICS in 2014. Matt spent the first 2.5 years surveying and valuing properties in the Coventry area and subsequently joined our technical services team based in Milton Keynes as quality and audit manager with responsibility for the quality assurance and audit functions across the surveying business. Early in 2016, Matt put himself forward for selection and was successful in gaining a nomination to the Surveying Services Leadership Development Programme, and which we put in place actually to offer greater insight and personal development opportunities for aspiring surveying colleagues as we build the next generation of leadership. More recently, Matt's refocused the next phase of his RICS professional career and is currently enrolled on the RICS Assessment of Professional Competence, APC, with the objective of gaining MRICS Chartered Surveyor designation later this year. And Matt is not unusual, nor is he an outlier. So we're really proud of what we've done there. The evolution from surveying undergraduate degree holder, member of RICS, through to future attainment of RICS regulated charter surveyor status really does underline both the potential and the success of the Countrywide Surveying Academy programme, through which Matt, together with almost 150 colleagues, continue to develop personally and to develop their careers. The programme has changed our business, and it was a big call when we invested what we did to start that programme. But it's also changed the mix and nature of our surveying colleagues. Previously, our surveying team was 90% male and 10% female. Since we started our programme, we've moved forward, and I'm pleased to say that now a quarter of our trainees, and in total, I think last count, we have about 54 female surveyors in the business, but a quarter of our trainees, and a continued focus on that gender balance as we bring new people into the organisation, is making a really fundamental difference to our workforce, and long may that continue. We could be doing more as a business and an industry, and we'll continue to do that, but equally bringing women into our workforce, we have as an employer to continue to do more to help women flourish and to support them as they build their careers and in many cases juggle other challenges going forward. Our growth agenda is aligned with demand and addresses areas where we think we are either underrepresented commercially or where we think we have too much exposure to what is a very cyclical property market. And so there are 3 areas in Countrywide when we think about developing our portfolio. And I'd just like to give you a little highlight, really, of what each of those 3 means. The first is we think there is a really significant opportunity for the group in our financial services space. I've already said that we're the UK's largest single mortgage broker, and the growth of our financial services within the group, particularly the growth I talked about earlier in the remortgage market, was one of our biggest success stories and frankly one of the most fundamental planks of delivering our results in 2016. Just to give you some sense of that, our conversion, when we talk about remortgage business, we're effectively talking about how good are we at converting the business of a mortgage that we introduced. Now, just to give you some sense of the scale of the opportunity there, if I go back to 2015, of the mortgages we wrote, 90% were written on a 30-year term or more, and 85% of them were either on 2 or 5-year fixed products. So the opportunity for continuing to serve those customers and write that business is really significant. It may shock you to know, though, that way back in 15, the percentage of customers whose mortgages we rebroke, having initiated them, was 13%. And that against, at that point, an industry average of about 30%. I'm delighted to say that we are now well north of 25% and continuing to grow. But the industry is moving forward too, and that's not a surprise if you think about the environment we are in. If it's more challenging to be writing a volume number of home owner or home purchaser mortgages, then the focus on remortgaging, of course, becomes important. I am always staggered by the apathy in this space when the difference between a fixed rate and a standard variable rate can have such a significant impact on somebody's monthly repayments. But it's a huge area of opportunity for us. Equally, though, we punch below our weight in the space of helping first-time buyers to take mortgages and to get the best possible mortgages for their circumstances. We acquired a business called the Mortgage Bureau just over a year ago, very much focused on new homes mortgages, very strong relationships with developers, and therefore very exposed to the opportunity that exists within first-time buyers. We see significant further potential in the financial services market for us. Our relationship with lenders are very strong, of course supported by the relationships we have through our surveying business. And we remain very committed to growing this part of the group. Second big drive for us when we think about our portfolio, and this is a shift from the way we saw the world in 2014, is organic growth. We've moved away from a strategy that was fundamentally underpinned by continued M&A, particularly focused in the lettings business, partly because of the consequences of the market we're in, getting very focused on what we do with our cash, getting very focused on returns, but predominantly because we have much more confidence about our ability to grow our business organically. With over 90,000 homes under management already in this country, and yet the vast majority of landlords splitting their portfolio, so we know we don't have all of the homes that a landlord owns, we think there's an absolutely massive opportunity for us. The route to that, we firmly believe, is continuing to improve our landlord retention rate. We've gone from about 38% landlord attrition down to just over 18% in the last 2 years. And we want to grow the number of properties we manage because landlords choose to give us their stock to look after. We've strengthened as well our overall customer offering with the launch of our multi-channel proposition, and we know this will be a fantastic space to enable us to grow our market share in estate agency. But there's much more for us to do. Investment in our people and in our processes is driving better conversion of opportunities, for us now at an all-time high, and significantly lower withdrawal rates than we've seen for 5 years. Nowhere has that more acutely made a difference, actually, than our market share in London, but we still see significant opportunity for growth, particularly in the market that's somewhere between the 350,000 and £1 million mark. And we're extremely focused on looking to take share in that space. The third area for us, and I sort of touched on this earlier, is that we've got to maintain the focus that we've brought on cost and cost optimization. Now, 2016 was a tough year for us, and we moved at pace to take cost out of the business. And this is always a difficult one, because on the one hand, when I'm thinking about managing returns for shareholders, when I'm thinking about the productivity and profitability of our business, I can talk with pride about the amount of cost that we took out of our business quickly after June the 24th last year. The flip side of that is the bulk of that cost is people, and it's people's lives, and it's their livelihoods, and it is heartbreaking, frankly, when as a chief executive you make decisions to take people out of a business through no fault of their own. So I wouldn't want anybody to think that it's some sort of chest-thumping act to stand here and speak about how much cost we got out of the business quickly. It was painful, and I would very much like not to go there again. However, it did give us a license to continue to operate, and it brought a new reality, actually, in terms of the size of the business that we can be, reflecting the size of the demand that we see out there and the size of the market. What's critical going forward is actually that we have a focus on what my new CFO would describe as cost leadership, so that you don't let cost creep back into your organisation, but actually that you get much more focused on what I would think of as strategic cost out. And I think for us, there are 3 strands of that will be very important over the next few years. The first is that we'll focus our effort and energy on fewer, stronger brands. You may or may not know that across the group we have 82 brands. 62 of them are directly consumer-facing. That is inefficient by anybody's measure. We know that where we invest in strong brands, we get a better return. We will have bigger, better branches. I actually believe that having taken the pain of almost 200 branches closing across the network last year, we're not far off having, awful term, right-sized our operation. And although branch closures and opening have always been a feature of our sector, I think broadly speaking, as we think about multi-channel, broadly speaking, I think we're there or thereabouts, and we do not underestimate the importance and value of a high street presence. We need efficient back office services. We've got 27 separate contact centres and processing centres across the group at the moment, and again, you know, that cannot represent, it's a function of a business that has grown rapidly through acquisition, but it cannot represent the most efficient way of serving our customers or investing our pound. But to do any of that, we need contemporary technology platforms, and probably the single biggest call on our capital investment over the last year and into the next 3 will be what we invest in technology. So, as we move into the second half of 2017, we actually do so with a lot of confidence. Self-help has served us well in getting to where we are today. The progress made and the momentum that we gained from acting rapidly in the terrible market conditions in the second half of 2016, we think put us on the front foot, and we think give us a time to market advantage beyond that of our competitors. So our strategy hasn't changed. We'll continue to focus on delivering a better, more personalised customer experience and creating an internal environment for those colleagues that are still with us and want to be with us to build their futures a good one. But the challenges of the property market, as I said, and as I close, I cannot emphasise strongly enough, are not going away. We need to ensure that inside Countrywide, we acknowledge that it's at the basis of our planning, and that we're not sitting on our hands waiting for the market to do us a favour. And so to some degree, this gets me back in closing to where I started, about the importance of RICS and the critical role I think RICS can play across the sector. The various parts of this sector in its entirety really don't come together as often as we should, and therefore I think we are suboptimal in how we seek to get our voice heard and how we seek to influence government and other organisations, particularly local authorities across the UK. We would absolutely welcome RICS doing more to help bring SMEs and larger firms together to engage with and make use of and add value to the proposition that is UK residential. Help us get our voices heard. We need our government to realise the importance that the property sector has in ensuring that every person in this country has a safe and functioning home. We need to make that difference today, and I'd encourage RICS and all of us as members to build on the very strong foundations, the reputation, the contacts and the access that you have. Let's lead our sector in being a positive force for change in a terrible market here in the UK over the next few years. Thank you very much for listening.